Have you ever wondered how real estate market cycles work and how they can help you find discounted properties? Let's delve into that, shall we? First, let's break down the concept of real estate market cycles. There are four main phases: expansion, peak, contraction, and trough. During expansion, the market grows, demand rises, and prices go up. The peak is where things are at their highest, with property prices at their zenith and a sense of euphoria in the air. Then comes contraction, a slowdown in the market where demand decreases and prices may start to decline. This phase often presents increased opportunities for discounted properties. Lastly, we have the trough, the lowest point in the market cycle, where property values have significantly declined. Now you might wonder, what influences these market cycles? Well, there are several factors at play. Economic indicators like GDP growth, employment rates, and interest rates significantly shape the real estate market cycles. Also, the balance of supply and demand in the market can impact these cycles. An oversupply of properties can lead to contraction, while limited supply can stimulate expansion. Interest rates too play a crucial role as they influence borrowing costs and, consequently, the demand for real estate. Demographic trends and government policies also have a say, as do global economic conditions, which can have ripple effects on local real estate markets. So how does one identify these market cycles? Keep an eye on economic indicators, real estate reports, and local market conditions. Understand the supply and demand dynamics in your local market. Stay updated about interest rate trends and monetary policy. Now comes the million-dollar question: how to find discounted properties in different market phases. In an expansion phase, it's best to focus on strategic long-term investments. As property values are expected to rise, the chances of finding discounted properties might be slim. However, a keen eye on emerging neighborhoods or properties requiring improvements can yield potential deals. In a nutshell, understanding market cycles can be key to finding discounted properties. By knowing the phases of the market cycle and being aware of the influencing factors, you can identify the best times to invest. Remember, real estate investing is not just about buying properties, it's about buying them at the right time and the right price. And that's where understanding market cycles comes in handy. It's a tool that can guide you to make savvy investment decisions, helping you find discounted properties and maximize your